Welcome to this financial statement analysis presentation prepared by the CLICS Financial Hub team. Today, we will be analyzing Zambia Reinsurance PLC's performance over the past 3 years, focusing on profitability, liquidity, solvency, efficiency, and overall financial health. This analysis was created as part of Dr. Brian Kaulu's financial statement analysis course at the University of Zambia. Our team consists of the following team members: Samuel Solopi, who is the group leader; Cindy Mono, the presenter; Convenience Chifuti, the analyst; Chelo Kaponda, the researcher; and Lombe Lulambe, the editor. All insights are based on Zambia Reinsurance PLC's annual reports from the year 2021 to 2023, as well as the International Financial Reporting Standard Guidelines and information from the Lusaka Securities Exchange. We used Microsoft Excel for computations and PowerPoint for this presentation. Zambia Reinsurance PLC is a leading reinsurer in Zambia, providing reinsurance and retrocession services to insurers. In 2023, the company adopted the International Financial Reporting Standard number 17, which significantly changed how insurance contracts are recognized and measured, adding complexity to financial analysis but improving transparency. We'll further dive into our qualitative financial analysis of this statement. So the first ratios that we'll analyze are profitability analysis ratios. So return on equity improved from just 1.4% in 2021 to 6.8% in 2022 and a strong 14.7% in 2023. And this is what the graph below is showing. Similarly, the net profit margin rose from 1.41% in 2021 to 17.2% in 2023. This upward trend highlights improved efficiency, profitability over the 3-year period. And this is what is shown in the graph below. In terms of liquidity and solvency, we considered measures like the current ratio and debt levels. These ratios indicate whether Zambia Reinsurance can meet its short-term and long-term obligations. Generally, the company shows stable solvency, but liquidity movements should be carefully monitored, especially in an industry sensitive to claims volatility. The above information is presented in this graph. Going into another set of ratios, which are efficiency and activity ratios. Asset turnover declined from 0.82 in 2021 to 0.59 in 2023, showing that revenue generation per asset is weakening. The information presented above is shown in this pie chart, indicating that in 2021 we had an asset turnover of 0.82, and in 2022 we had an asset turnover of 0.66, and in 2023 we had an asset turnover of 0.59. Receivables turnover also fell, suggesting the company is taking longer to collect from clients. This is a concern as delayed collections can affect cash flow. It also showed that quickly premiums and reinsurance receivables are collected. A low turnover may point to collection issues. And the summary of asset turnover and receivables turnover is shown in this graph. Moving to the common size income statement of Zambia Reinsurance Company, which analyzes the income statement in a common size terms. We can compare costs and profits relative to revenue. This helps us understand whether expense structures are improving or worsening, independent of size. For Zambia Reinsurance, profit margins have been improving, which indicates stronger cost control. We now take a dive into a common size balance sheet. On the balance sheet side, common size analysis shows the composition of assets, liabilities, and equity. Zambia's reinsurance balance sheet is increasingly equity-driven, strengthening the capital base, though raising receivables remain a weak spot. The graph shows how assets, liabilities, and equity were distributed throughout the year. The cash flow analysis involves three major activities, namely operating, investing, and financing activities. So, positive operating cash flows indicate strong cash generation from reinsurance operations. In 2023, strong inflow from disposal of investments and assets. Financing flows review dividend payments or new debt issuance. During the firm's financing activities, key trends were shown. In 2021, outflows due to shareholder returns. In 2022, continued payouts. In 2023, no major financing activity reported. Moving to the common size cash flow statement, operating cash flow indicating the company is not generating cash from its core operations. Investing cash flow that indicates that the company is likely to sell off its assets or divestments. Financing cash flow indicating no financing activities. Net cash flow which is driven by investing activities. Ending cash and equivalents, which sums up to a total inflows of 100%. Overall, the company's cash position is driven by investing activities rather than core operations. The free cash flow to firm calculation shows how much cash is left for shareholders and leaders after reinvestment needs. A positive free cash flow to firm means Zambia Reinsurance has surplus cash to grow or distribute, while a negative free cash flow to firm may mean heavy reinvestment or cash strain. To summarize the Zambian's reinsurance cash flows analysis, improving operational strength, but we must note significant fluctuations in working capital. This means while profits look strong, cash inflows are still uneven. A company's cash health is just as critical as its profit levels. We also assessed earnings quality. First, the accruals ratio is an important measure. The lower it is, the more profits are backed by real cash. We compared net income against operating cash flows, and while earnings are trending upward, some reliance on accruals suggests caution. Additionally, we looked for unusual one-off items, sudden revenue spikes, or aggressive accounting. While no major red flags emerged, receivables growth is something to watch. Finally, we touched on accounting standards. Zambia Reinsurance follows IFRS, and in 2023, it adopted IFRS number 17. If we were to compare with US GAAP, there would be differences in revenue recognition and measurement of insurance contracts. Such differences can impact reported profits and solvency ratios, making cross-border comparison tricky. The recommendation based on financial performance trends, earnings quality, and risk considerations, Zambia Reinsurance Plc is recommended as a buy. The company has demonstrated consistent growth in profitability and improved returns for shareholders, making it a suitable investment option for a 1.5 million kwacha retirement package.